Unit 2. Tax System. A taxable person is any person independently performing any kind of business at any place, regardless of its purpose or result. Non-residents and foreigners are subject to special regulations that are often related to the taxation system of the country of their permanent residence. For companies that are registered in Slovenia and owned by non-Slovenians, the applicable tax rules are the same as for local companies. The Tax Procedure Act, ZAV2, is regulating the tax procedure, in particular, tax billing, assessment, payment, repayment, supervision and enforcement, collection of taxes, rights and obligations of taxable persons, state administration and other bodies in charge of collecting taxes in accordance with the legislation, as well as other persons in the process of collecting taxes, safeguarding of the data required in the tax collecting process, and mutual assistance in tax collection and data exchange with the other European Union member states, with third countries and territories. Taxable persons are both legal and natural persons. Since 2005, residents of Slovenia have been taxed based on global income, meaning their taxation is based on their taxable income irrespective of where it has been generated, within the national borders or abroad. In addition to the provisions of Slovenian tax legislation, the international treaties on the avoidance of double taxation represent an important mechanism for preventing double taxation of both natural and legal persons' earnings. Any possible privileges and immunities belonging to international organizations and missions or their employees and members are based on either the national legislation or international treaties ratified by Slovenia. Certain international treaties which bind Slovenia stipulate income taxation in a different way than the national tax legislation, therefore, both institutions and taxable persons with such earnings are entitled to the benefits provided for in such a treaty. To see whether Slovenia has signed an agreement on avoidance of double taxation with a third country, the interested party shall consult the FIR's website. Income tax is a tax on income of natural persons resident in Slovenia. The FIRS calculates income tax on the basis of official records, data sent by employers, and data sent by natural persons themselves. An informative calculation is sent by the Statistical Office to the natural persons who have the opportunity to complain in case of any missing or incorrect information. Non-residents of Slovenia are obliged to pay the income tax they deserve in Slovenia. Owners of real estate in Slovenia, including foreigners, are obliged to pay property tax in accordance with the provisions of the Citizenship Tax Act, only natural persons, and are responsible for paying compensation for the use of building land of natural and legal persons, NUSH, in accordance with the provisions of the Building Land Act and municipal decrees on compensation for the use of building land. The NUSH payer is a direct user of the land or building or part of the building, that is the owner of the right of disposal or the owner, the tenant of the apartment or the owner of the business premises, the owner of a housing right. If a foreign real estate owner sells a property, the taxpayer for real estate tax is in accordance with the provisions of the Act governing the turnover of real estate. Value-added tax, VAT, called DDV in Slovenia, is governed by the Value-Added Tax Act, ZDDV1, which is fully compliant with the European Union VAT directive. VAT is charged for all goods and services delivered by a taxable person within the scope of its business operations in Slovenia, including shipments of products such as vehicles. By VAT, added value is taxed. This type of tax applies to goods and services at all stages of trade from production, wholesale, retail to final consumption. In principle, VAT is levied and paid by a taxable person at each delivery of goods or services or any transaction considered by the VAT legislation as such, with the exception of certain expressively specified transactions which are exempt from VAT. In accordance with the national VAT legislation, VAT is charged for deliveries of goods and services at a general rate of 22%, except for those goods and services for which a reduced rate of 9.5% applies. The list of goods and services subject to a reduced VAT rate is shown in Annex I to the ZDDV1. A taxable person is obliged to pay VAT to the state budget on a monthly or 3-monthly basis. When acquiring the status of a sole proprietor or starting up a company, an entrepreneur may freely decide whether to enter the VAT scheme or not. The integration becomes compulsory as soon as the amount of taxable turnover in the last 12 months exceeds €50,000. Above this threshold, any form of business is unconditionally integrated into the VAT system. Procedure for obtaining VAT number and accessing the system is described in Unit 3. Taxes are paid by companies based on their profits, corporate income tax. However, once the profit is distributed among the owners or shareholders, these are charged capital gains tax, CGT. Systematically regulated by the Corporate Income Tax Act, ZDDPO2, the corporate income tax is the fundamental form of direct corporate taxation. The object of this taxation is the profit from business operations performed by either a resident or a non-resident within or via a business unit located in Slovenia, corporate income tax, and the income sourced in Slovenia for which the tax is charged based on the source. For determining profits attained by a legal entity, the revenues and expenditures established in the profit and loss sheet showing the revenues, expenses and profit or loss are recognized on a legal basis and in accordance with the applicable accounting standards. While in 2018 the general corporate income tax rate is set at 19%, the tax withholding base rate is 15%. The amount of tax payable by an enterprise is calculated in the income statement. Based on a number of tax incentives about which the entrepreneur shall be informed by his or accountant, the tax calculation basis may be reduced. The taxable profit of a non-resident's business unit in Slovenia is defined as the profit attributable to that business unit. An entity may be attributed the profits which could be expected to be held by that establishment if it were an independent taxpayer performing the same or similar activity or transactions. The revenues generated by performing business activities or transactions within or via a non-resident's business unit located in Slovenia and the actual costs incurred for the purposes of this business unit, including administrative and general administrative expenses, shall be attributed to this business unit whether incurred in Slovenia or abroad. A sole proprietor is a natural person and therefore not considered a legal person. Taxation of sole proprietors is governed by the Personal Income Tax Act. With a sole proprietor, the subject of taxation is the taxable income from business operations. The income considered as taxable income from business operations is any income achieved by performing any entrepreneurial, agricultural, forestry, occupational or other independent business operation. The incomes from performing basic agricultural or forestry activities are treated separately. In the latter area, some specific taxation rules apply. The essential elements underlying the definition of taxable income from business operations are the following. The business is performed permanently, a one-off or occasional transaction is not a business activity, and the business is performed independently and autonomously. The business is performed by the taxable person for his own account and benefits, upon his her full responsibility and by warranting with all his her assets. The calculation base from the taxable income from business operations is the profit determined as the difference between the revenues attained and the expenditures incurred when performing the business. Liable to income tax from business operations are all private individuals. In addition to individual sole proprietors, this category includes other natural persons who declare to be performing any business activity based on other regulations, for example notaries, lawyers, freelance journalists. The tax calculation base of the taxable income from business operation for a sole trader is determined by following one of the following two options. By considering actual revenues and expenditures, or by considering standardized expenditures. For those whose tax calculation base is determined by considering actual revenues and expenditures, their tax base equals the profit achieved. The latter is determined by deducting tax-deductible expenditures from the recognized revenues generated in a calendar year. To determine tax-recognized revenues and expenditures, the Corporate Income Tax Act, ZEDPO2, is a subsidiary used in addition to the ZO2. In accordance with the provisions of this Act, the revenues and expenditures quoted in the income statement and adjusted for tax purposes in accordance with accounting standards are recognized for the determination of profits. If a sole proprietor chooses such a method of calculating the tax base, he shall submit a tax return form to the tax authority no later than the 31st of March of the current year for the advance payment of income tax from business operations. In the tax statement, a taxable person may also apply tax incentives provided for by the Personal Income Tax Act. Another possibility of determining a tax incentive is a simplified way of determining the tax base. This is derived from the actual tax-recognized revenues, while the expenditures are determined at a flat rate amounting to 80% of the generated tax-recognized revenues. A taxable person may opt for this method of determining the tax base only when meeting the condition that with respect to the standardized expenditure her taxable income from business operations has not exceeded €50,000 or, in certain cases, €100,000 in the tax year prior to establishing the tax base as determined in accordance with accounting standards. He/she is a new entrepreneur having selected this calculation mode when registering. At the time of determining the tax base, regarding the standardized expenditures, actual expenditures, tax incentives or tax losses from previous tax periods are not taken into account. In accordance with Article 73 Par 4 ZGD1, a taxable person having opted for the tax base with respect to the standardized expenditure is not obliged to keep books and submit an annual report. The standardized expenditure amounts to 80% of the revenue, and 20% of the income is taxed at 20%, which is 4% of the gross revenue. In the case of determining the tax base by considering the actual expenditures, the income from business operations is included in the annual tax base of an individual. The total annual tax base of an individual is then taxed on progressive income tax scale. Income Tax Act, ZO2, includes the following incomes from capital gains: interest, dividends and profit from capital. The following items are deemed the capital: immovable property, regardless of whether it was divested in a changed or unchanged condition; securities and stakes in companies, cooperatives and other forms of organization; investment coupons. Income tax is taxed on the profits earned through the disposal of capital. As a rule, interest, dividends and capital growth are taxed at a 25% tax rate. When taxing profits from the disposal of capital, the holding period shall be considered. For a holding period of up to 5 years, the income is taxed at 25%, for a period of up to 10 years at 15%, for a period of 10 to 15 years at 10%, for a period between 15 and 20 years at 5%, and for a period of over 20 years of holding period the profit is exempt from tax. In the European Union, transfers of assets, share swaps, mergers and divisions between companies with an office in Slovenia or other European Union countries are subject to the following rights to profit tax. At the moment of the transfer of assets, that is transactions where a company transfers without the liquidation one or more of its activities to another company, by a company, or to an entirely new undertaking in return for receiving or transferring inventories representing the capital of the recipient, the transaction shall be considered tax neutral, deferred from tax, under the conditions laid down by law. Following an exchange of equity interests, that is transactions where the acquiring company receives the stocks of the acquired company in exchange for its own inventories and thus acquires most of the rights in the acquired company, the shareholder of the acquired company is exempt from taxes on profit and loss due to the exchange of shares when no cash payments are received. Following a merger or dissolution of a company, for example, due to a change in the status of a group of companies in order to establish a new company or to divide the existing companies into several new companies in accordance with the Companies Act, the transaction is considered to be tax neutral, deferred tax, under the conditions laid down by law. In certain cases, the basis for the payment of corporate income tax for sole proprietors may be reduced. The following facilities can be used: investments in research and development, new investment, new employment and employment of disabled people, disabled persons as taxable person, carrying out practical work in vocational education, voluntary supplementary pension insurance, donations. A company employing a person under 26 or above 55 having been registered as a job seeker for at least 6 months and not employed by the same employer for the last 24 months is entitled as a taxable person to have its tax base reduced. The incentive amounts to 45% of the employee's salary and is limited to its tax base. A taxable person employing a practitioner for practical training as part of his/her professional training is entitled to have the tax base reduced for the amount of the trainee's salary, but only up to 20% of the minimum wage in Slovenia for each month of internship. An employer financing a pension insurance scheme for its employees may apply an additional reduction in the tax base. A supplementary pension insurance shall be paid to the pension plan provider located in Slovenia or another European Union country. The pension scheme shall be approved and registered in a special register. The scheme shall also comply with the regulations on voluntary supplementary pension and disability insurance. Tax benefits apply to the year when the sum of insurance premiums paid did not exceed 24% of the compulsory pension, while the contribution for disability insurance for employees insured persons amounted to a maximum of €2,819.09 per year. The tax year in Slovenia ends on the 31st of December. Business entities must file a yearly report, on which corporate income tax is calculated, by the 31st of March. Reports on VAT have to be filed in monthly or every 3 months, depending on the overall income of the company. The corresponding reporting is done electronically on the Accession website. A digital certificate is required which is obtained on the basis of a written request. The choice whether to opt for voluntary inclusion in the VAT system or not depends on how and with whom the business is operating. Should the entrepreneur decide to become a VAT payer, he/she shall not forget to charge the applicable VAT in addition to the net price of his/her products or services. This means that for the end customer the product may turn more expensive. In the B2C context, this higher price may pose a barrier to conducting business. For a company operating with VAT payers, however, charging VAT usually turns out to be more favorable for all partners since following the end of a specified time period, monthly or quarterly, the entrepreneur is obliged to pay the VAT collected minus the amount of VAT paid earlier for purchasing the necessary business assets. Like most of the Slovenian companies, it is advisable that foreign investors also leave preparation of the required tax reports to the experts from accounting services.